We are being joined by Mr. Sandip Agarwal, the fund manager and co-founder at Sowilo Investment Manager. Good afternoon, sir, and thanks for joining us on the show. What's your take on Nifty IT today?
No, so as far as Accenture is concerned, if you see, they have seen weakness in their consultancy piece for quite some time now, and hence this postponement. And this postponement, this cycle is ideally December, but I think it has been postponed now to June. And let me put it this way: that first of all, we don't directly track Accenture's consultancy business for Indian IT because we have more relevance to their outsourcing, which is doing good for quite some time. But as far as IT index is concerned, I would like to reiterate that probably January, February was the best time to buy Indian IT because all these stocks were at very low valuation and reasonable valuation. And in every interaction which we have done on your channel also in last 3 months, we have reiterated that there is 10%, 10 to 15% more upside. And I think in last 1-2 months that has already been achieved. So I think from here, you remember that this sector is actually at maximum 8-10% revenue growth and 12-13% profit growth sector. And from that perspective, I think every year the IT index should generally give that kind of return. And if it has not given for a year, it should bundle up in the next year. So we have already seen weak 2 years in the past, but last 6 months, 8 months, huge returns have been made, almost 25-30% in most of the stocks. So we believe from here on the returns will be stock specific and not index specific. So I think the returns for this year are broadly made in the large cap names, except one or two. And similarly in the mid cap, in the ER&D, because it is a decadal story, there could be still more upside. But otherwise, the good run is already behind in my view.
So the good run is already behind. So in terms of stocks, are you looking at more of large cap names or more of the mid cap ones?
So in the large cap, wherever there is a value, for example, there is a leadership change there, I think there is still some upside because the margins are at bottom and there is a turnaround which is happening. But in the likes of TCS, Infosys, I think, large amount of valuation has been achieved. So I think that now returns will be more earnings based, which will come with earnings. So it will be, difficult to predict when that will come. But wherever there is value like HCL, Techem, there is still some value left. There could be some returns. Similarly, in the mid cap, the expensive ones, there is not much value left right now. But in ER&D like Persistent or Tata Elxsi or KPIT, Tech and all these names, what happens is that people are buying with a 10-year perspective, 5 years, so they are okay to give some higher multiple. But again, there also I believe that a good run-up has already happened. So I will reiterate that this is a sector where 10-15% annual return for large cap and 18-20% for the mid cap is what you should expect, and I think that returns have already been achieved in last few months. So I would not be willing to put new money in these names from here on unless there is a deep value in some of the names.
Right, Sandeep, this is Harsh also joining in. Sandeep, just for context, right? This move by Accenture to delay to rather delay any increments that they are going to give to their employees. What does this signify? Is it an Accenture specific kind of an issue, or do you believe that pretty much all of IT will be affected? Not by the news, but because all of IT is affected, likely Accenture is doing this. What is your take?
So there are three different interpretations. First of all, this is not Accenture specific problem. It is consultancy specific problem, and consultancy specific because last 1 or 2 years they have done well on the consultancy side. If you see the Nasdaq stocks, they have all done well. They have touched, in fact, new highs in just 1 year, and their direct correlation always is with consultancy. So I think from that perspective, now with perspective that US can go into recession or there could be hard landing, all those overhangs, I think consultancy business will be stopped or paused by the clients. So that is the issue on the consultancy side. And because Accenture has more exposure to that, they have done this as a precautionary measure. I don't see direct read through of this on Indian IT because we are more on the outsourcing side, which is doing well. So that is one interpretation. Second is on the Indian IT, as I will reiterate that we will do very good on the business side. Our revenue growth will pick up from here. Our margin will positively surprise for at least next 3 to 4 quarters because attrition has come down substantially in last few quarters and the benefit of that will flow in the margins. Having said so, the stocks have already inbuilt that, and the stocks have run up quite a bit, and that's the reason I'm saying the returns from here will be limited. And the third interpretation, which is totally different, is on the mid cap. There are two types of company. One is IT services, where I think large part of returns have been made. It will be difficult to justify higher valuation from here. And the second part within the mid cap will be the ER&D, where while returns have been made and the stocks are very expensive, but because investors perceive them as a long-term high growth industry, that's the reason that people may always come and buy at every 5-10% correction for a longer term. So that may continue. So these are three different interpretations, different perspective on different stocks.
Right. So in a nutshell, if I were to put this, Sandeep, just the fact that the knee-jerk reaction of nearly 3% on Nifty IT has happened today, you seem to be suggesting that there is very little margin of safety comfort in terms of valuations despite this 3% fall, and despite the fact that Accenture's commentary or action would not likely adversely affect Indian IT. But at the same time, you're not constructive because valuations have run up. Is that the correct way to kind of sum this up, at least from today's perspective?
Yes, absolutely. So let me, in one line, summarize. Accenture numbers will not improve from here materially, and hence the stock will be consolidating here. Indian IT companies, the numbers will be good going forward because of better margins, but valuations have already run up before that. Let me put, so that is the basic conclusion.
Got it. Now, Sandeep, if I were to switch focus, there is the other big move happening later today evening, which is the Fed. Now, Fed may cut 50 basis points, may cut 25 basis points. What does that do to IT? What is your sense with regard to growth? You've given us your preferences at the moment in terms of how you believe IT sector is looking from an investment perspective. But what from a sector perspective? How should one look at growth more constructively?
So on the growth, there are two aspects. One is consultancy growth, one is outsourcing. I think outsourcing will keep going up because it is the cheapest way of executing some of the toughest tasks, and the way AI is growing, there is a lot of work which needs to be done. So I am not at all worried about outsourcing revenue growth. On the consulting, I think people, because in consulting what happens, it is mostly discretionary. So it is not urgent spend. So what happens is, even with the Fed rate cut, they don't throw a perspective on what will be the revenue growth in the US. So all the clients will try to, see how the growth shapes up, and then they will open up their purses for consultancy. That is the way I read it. So, whether rate cut is 25 basis point is positive or negative, or 50 basis point is positive or negative, because I can read 50 basis point cut as Fed seeing a hard landing, and that's the reason they are doing 50 basis point, and then that becomes further negative for consultancy. So it can be read in that way also.
Right, so it becomes further negative for consultancy, but the IT names which are largely related to the outsourcing side of the business, do you think that this will be positive for IT names? And also, do you think that this is already priced in the kind of run-up that Nifty IT has given in the past 3 months, up about almost 30%?
So revenue growth, I think, will not change for IT outsourcing. It will be good. Margins will be even better. But all these have been factored in my view, in the past few months of run up in the index.
Okay, but do you think it's already priced in and no likely any significant movement is expected in the next 3 months?
Yes, I don't see much movement, and even if it will, in my view, best case, it will consolidate here.
And Sandeep, just from a growth perspective, what happens if a soft landing is not achieved? How should one look at IT then?
See, again, as far as numbers will be concerned, because we do most of the outsourcing work, generally we have seen in the past, when there is a challenge in the economies, then more outsourcing happens because everyone's focus shifts to cost saving, and cost saving is achieved more by outsourcing and not by consulting. So I think it always helps, but then the multiples do go down because people see that in a weak economy, why should we assign higher multiples? So I think finally on the stock behaves differently than the fundamentals. Fundamentally, business should do well in hard landing because everyone rushes to cut costs for the outsourcers, and the outsourcing becomes a preferred choice, and consultancy get restrained. But from a stock perspective, the multiples do correct when there is a hard landing. So again, it will consolidate in my view, even in that perspective.
So not at all constructive per se. Uh, it
Yes,
seems,
valuations have
Sandeep.
run up. Valuations have run up actually.
Right. Uh, yeah,
Yeah,
Rucha, go ahead.
valuations have run up, is true, but then many brokerages are also bullish on the large cap names, Harsh and Mr. Agarwal. Macquarie had come out with a note wherein it prefers TCS over the big name Infosys. But what we are hearing from analysts is that the management is really not bullish in the second quarter, and they are also speaking about how the banking space, the space from where IT majors earn majority of the revenue, is likely to be soft in the second quarter. So what is your take on that? Do you agree with the TCS management?
No, so it is very hard to comment against the management because they have more data than us. But let me put it this way: if there is any kind of caution, and if there is a soft landing or hard landing, whatever it is, uh, obviously the banks, which is the biggest spender of tech, they will take a pause and they will see how the situation evolves. So, in my view, again, I would reiterate that everything is in stock price. The positives are there in the stock price. The negatives can, when they come, then they can derail a little bit from here. That is the way I see it.
Sandeep, you spoke about ER&D. It's probably the only part of everything you've said where you've sounded a wee bit constructive, if at all. How should one read that? Is there a specific couple of names you're looking at within the ER&D space which is looking good from a long-term perspective? Or are you, as a fund manager, holding back? Are you not really, deploying at this point at all?
So, we hold some of the names in ER&D, so hard to comment on stock specific names. But let me put it this way, that if you take next 10 years, then if IT outsourcing is going to grow at X% CAGR, then the ER&D will grow at 2.5X. That is the way it will pan out. So obviously from a structural perspective, ER&D stocks on any deep correction of 15-20% or even 10% is something which everyone should look to accumulate, because it is a 10-15 years clear runway. So I think long-term investor won't mind paying a little higher multiple to them.
Point taken, point taken. Thank you so much, Sandeep. It's been good interacting. Of course, not constructive on IT, but significantly insightful views given the kind of macro which is evolving around IT and which might well affect IT in a good or an adverse manner. So thank you so much, Sandeep. It's been good chatting.
Thank you.